Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Welcome to the Stock Play of the Day. Well, we have a lot going on in the markets today. We're going to focus on the travel industry, and in particular, we're going to talk about airline stocks. So today we're looking at the URL that, or the ETF that tracks airline stocks, and that's JETS. Jets is the symbol. We'll discuss, should we pass or should we play? Hello, my name is Brian Overby. I'm the Senior Options Analyst with Ally Invest.
And I'm Lindsey Bow, Chief Investment Strategist with Ally Invest.
Well, Lindsey, I'm seeing a lot of green in the markets out there. What do you see going forward this week in the markets overall?
Well, there's a mix of data driving markets this morning. One of the biggest news items has been the vaccine from Pfizer, but we also have the removal of election uncertainty and then some export data from China that shows strength in items sent to the U.S. So the S&P 500 is hitting a new all-time high today. We also see the NASDAQ up. We see the Dow up. We see the VIX moving back a little bit. So it seems like investors are feeling pretty optimistic, and it seems like there's this risk-on tone in the market. Now, to be sure, the news out of vaccine and their partner BioNTech about their vaccine that is supposed to be 90% effective in preventing getting COVID-19. That has been some good news this morning. It's really driving market action, and I think that investors are feeling positive because this is something that can actually be a game changer. Why is it a game changer? It's a game changer because it can change the projection of the economic outlook and profitability prospects for corporations. Now, that being said, it's very exciting, but we also need to be careful and understand, what does this really mean for the marketplace going forward? So there's a couple things to consider. This dovetails really nicely with some of the economic data that we got last week as far as jobs. Manufacturing data was good. Consumer spending and confidence remains elevated. So we want to feel pretty optimistic about what we're hearing. But at the same time, every rally can be met with a pullback. And given the sharp bounce that we're seeing today, sometimes investors need to let the dust settle a little bit to digest the information. And I think some of the biggest risks that the market faces today really are what the distribution of this new vaccine is going to look like in 2021 and into 2022. How willing are people going to be to accept it? And then also, how does the economic environment and the consumer react going forward? So those are a couple of things that we're going to need to look forward to as we move through the next couple months. But certainly in the near term, you can see the pop that we're seeing is cheering people's moods, I think. So one thing I will say is, if we do get any pullback on those question marks, and we do have unemployment that remains stubbornly high here. There are a lot of people out of work, and some of the hardest hit sectors like restaurants, hospitality, and leisure. We're still working on a clear path forward to their recovery, and we'll need more information on that before we can get a full assessment. But we do know that the market is a forward-looking mechanism. So that's what they're pricing in today, this game changer of a vaccine. Now, when we think about next year, I do think that any pullback near term or in the early parts of next year on a slowing economic data picture could be met with a floor from the consumer. And that floor is related to the fact that how they feel about what their spending trends are going to be going forward. And I think the true test is going to come this holiday season in particular. As I've talked about steadfastly in the past, is the consumer has been in a better position at this point in time than they were entering the pandemic earlier in the year. Now, will that hold through the end of the year with unemployment elevated as it currently is? That's to be determined. But if they feel good going into the holiday spending season and they continue to spend, that could be a very good sign because they represent over 70% of the economic firepower that we have here in the US. So we're going to keep a close eye on that. That being said, given that there will be give and takes in the road ahead, as I've been saying for the last month or more now, is this is a time where I think investors can consider reevaluating their portfolios, looking at what they own, and consider potentially building out those positions in some value-oriented sectors or cyclical sectors that can benefit from a return to a normal reopening story for our economy. And those are sectors like the travel stocks, the leisure stocks, hospitality, cruise lines, the department stores this morning you see are moving higher. So the sectors that have been beaten down but benefit from a return to normalcy. We're also seeing a pullback today in some of the sectors of the work from home sectors that have done really well. That you may see a pullback near term, but I think again that those are going to be on a case by case basis. You're going to have to really analyze each individual security or sector or ETF that you're involved in, because some of them that have done well and flown high, benefiting from work from home, doesn't mean that they're going to be out of date or unnecessary in the future. We have changed the way that we operate in certain ways. Look, you're watching this on YouTube right now. A lot of people do a lot more things online. They use a lot more technology than they have in the past. So those are things to consider as well. So there's a lot of things to think about, but we do like the idea, like I said, of legging into some of these more cyclical, value-oriented sectors, but also maintaining your exposure to tech and defensives and those sectors and stocks that have done well, because I do think they're going to continue to need to do well in the future, maybe not as well as they have done in the more recent past 6 months or so. But we're going to need to see them green also for the overall stock market to move forward, given their heavy weight in the index. So overall, we're cautiously optimistic on today's news, and we're looking forward to the trends that will unfold into next year based on this. Now, Brian, with that being said, volatility is one of those things that we've been looking at for a weekly basis for some time now. We can't seem to avoid the conversation. And just wondering what you're seeing in the VIX. Like I said, it was last I looked, it was pulling back a bit, but it still remained above the 20 mark, which is the historical average.
Yes, the VIX is sometimes in up markets when everything's going well, the VIX just really isn't that interesting to talk about. But that has definitely not been the case since March, since we had the March lows. And now what we were anticipating, we saw the VIX make that big run up right before the election. The actual VIX index, the VIX, the volatility index that's posted by the Chicago Board Option Exchange, ran up to around 37% and kind of hovered there until the actual election date. And now we obviously see the drop off. Right now it's trading around 22 and a half. But more importantly to me to look at the futures. Now, the futures are still stubbornly staying around that 25 level. They haven't came down as much as the actual VIX index, implying that, yeah, we feel a little bit better about the marketplace now, but we're not quite back to where we feel really good about the marketplace overall. In other words, we're not seeing the VIX going all the way back to its mean average, and it's normally a mean reverting index. Now, with that said, Lindsey, if I look at the actual VVIX, which is my chart that I'm showing over here on my dashboard of the Ally Invest platform, the one thing that is real interesting to see is that we had a huge run up in the options that are in the VIX underlying. In other words, the VVIX is the VIX of the VIX. It's the best way to say it. But I highlighted a couple of weeks ago that it actually had ran all the way up to the 150 level, meaning that if you were trading VIX options, it was very expensive to do and very hard to do when you get the volatility up to that level. And what has happened now is that's came off quite a bit, a lot more than the actual VIX index relative, down to the 103 level, meaning that the juice that was in those VIX option contracts, which even added to that uncertainty, is now finally coming off. And granted, so that we finally had the major news that Pfizer's came out with a potential vaccine, or I guess I hesitate to say cure, but I guess that's what it would be for the COVID virus. And that has obviously taken away a lot of the nervousness in the marketplace. Who knows what's going to play out? It was phase 3 trials. We'll see exactly what happens over the next couple of weeks. Things are going to have to shake out. And I do expect volatility in the marketplace until that shakeout actually occurs. So we're going to see some highs and lows. I don't expect the market to go straight up. And the VIX is basically saying that, yeah, be prepared for some volatility to the downside or upside. But in general, big swings in the marketplace. All right, so we're going to look at the travel industry a little bit today. As I mentioned on the opening, the symbol that we're going to look at is JETS, JETS. It's based off of most of the airlines. And Lindsey, I'm going to pull up a chart here in JETS, and I want to kind of highlight a couple of things before I pass it over to you. In that we talked about this in the financials a little bit, where we had a little bit of a pullback in the financials, but not all the way back to the March highs. And we actually see that here in JETS. This is the Fibonacci numbers. If we go all the way down to the 100% level, down to the March lows from basically the highs before March, we see this level right here at that 50% level that JETS touched today, but it's actually came off a little bit today. So that's a fairly important number in general. But my whole point of highlighting this here is that we still have some room to run to the upside. In that we've made a move back, let's call it maybe 40% from the March lows approximately. It was around 32, came all the way down to 12. Now we're trading right now at 20.43. It was a little higher on the day, as we can see actually from the candle. But with that said, it's an interesting industry to be looking at now that we have some major news and some good news overall in the pharmaceutical space. So what are you seeing with JETS in general and the travel and airline industry going forward?
Yeah, Brian. I mean, this is really interesting. And I know you and I had talked about the airlines industry one off for several weeks now as we contemplated what the reopening and recovery story is going to look like going forward, because it seemed like, after we got past the COVID spike this summer, we seemed to have the cases had plateaued, and travel started picking up again. And this morning I actually go look at some of the TSA travel data. It was the middle 2 weeks of October. We got above above 1 million passengers traveling in one day, or excuse me, in 1 week. I'm sorry. So that was a pretty positive tone. We've come off that number a little bit, but we still are significantly elevated from where we were earlier this summer with number of passengers getting on airplanes. I think people, it might be a mix of things, people kind of just getting tired of being stuck at home or stuck in place, as well as people feeling maybe a little more confident about what the future has to hold and the ability for doctors and hospitals to treat the virus, especially after they saw President Trump go through having the virus and being able to take treatments to survive. So I think that customers are just, I don't, like I said, I don't know if they're just feeling more optimistic about the future or are just really sick and tired of being stuck at home. But traffic is up for the airlines. And, like I said in the intro, this is a sector that if you do believe that the reopening story is not only intact, it's something that is going to recover more quickly than anticipated currently. This is a sector that you can really get involved in. And I think that you're seeing that reaction this morning. Granted, we were in earlier trading, you saw the JETS ETF pop. It was up about 20%. Now we're up about 15%, which for 1 day move is huge. And like Brian, you pointed out, there's still a huge far to go for this type of sector to get back to its old 52-week highs. And it's something too that as a strategist, I've thought about thinking about getting involved more in these cyclical type sectors is that because they've been so beaten up and they're so reliant on the economic recovery story. I knew that when we would get news like today's, but again, we're not necessarily out of the wood today, but when you get news like we are today, and then you start to see some of that economic data support the news that the economy is improving, and it's starting to pick up the pace at which it's improving. These guys can benefit very significantly from that because they've been so beaten up, and there's been a lack of optimism around them. There's been a lack of belief that they can kind of get out of where they're at. Another industry you could consider is the cruise lines, also the hospitality groups, so hotels, restaurants, things like that. Those are the areas. Even department stores, like I mentioned earlier, could benefit from a vaccine being distributed and taken by consumers here in the United States. So I think it is definitely still an interesting entry point here. Again, this might be though a sector where we need, like after today's big pop, you need to let the dust settle again to get better clarity on exactly what it does mean for the airline industry, or is the airline industry going to get more funding from the government, while as kind of a band-aid until this vaccine is out there, until consumers feel more comfortable getting on those planes. We're not entirely sure, but it's definitely interesting to see the move that we're seeing today in the stocks for sure. And even, we're looking at the ETF, the industry overall, but you can look at different individual securities around these too. And the different airlines and suppliers to the airlines even have acted differently depending on what their debt load is, what type of customer they service. Or is it primarily a business customer that might take a little bit longer to get back into the groove of things versus just a regular retail consumer like you or I that might travel for leisure purposes. So there's all those questions. You've got the big Boeing is the big supplier to the airline industry, watching what's happening there. And then also even the guys that are supplying parts, like I think we heard from GE in their earnings call, a little uptick in their airline business, servicing business. So I think there's a lot of different ways you can think about playing this reopening trade, or even just the airline industry in general. But Brian, what's the trade that you've picked out for us today?
All right, excellent. And you made really good points. Now we're going to talk about jets today, just to be in general about the travel industry, specifically the airline industry. So that's part of the reason. But there are you as always on the stock play of the day, nothing that we actually do is meant to be a recommendation. We just want to try to learn. And this is a great learning experience because, as Lindsey mentioned, we have been talking about just where we would want to be if we got good news from the pharmaceutical companies out there about what's going on with COVID. So in general, if we were looking at speculating on good news, that would be a little bit different than looking at, well, the news is out. Now, what do we do? So because of that, the news is out per se. We still have volatility in the marketplace. The VIX is still up above 20. We've still got very volatile markets. But in general, because I'm going to count this as the news is out, we're going to look at buying a long-term option deeper in the money. Now, volatility hasn't came out of the Jets options contracts yet, and I'm going to highlight that. But we're now looking at the Ally Invest options playbook, and we're looking at the rookie corner, which is just basically saying, if you're bullish but nervous, let's not use all the money that we would to buy the stock outright. How can we kind of protect ourselves on the downside, but still give us a lot of upside? So the concept would be that I was going to buy 100 shares of Jets today. And if I did it today, if I would have did it on the open, I would be down already because the market had that volatility that we were talking about. It ran up and now it's came back down a little bit. And in this instance, by using that leap option, we're going to define our risk to the downside, but we're still going to get something that acts a lot like the stock. We're going to go a little bit deeper in the money. Now, I'm going to also highlight that if we were looking at this before the news, we might have thought about buying out of the money options and be a little bit more speculative on it. So that would just be a long call. And this inside the options playbook is the long call strategy. And specifically, I was talking before this announcement on a few other podcasts about looking at buying out of the money option contracts and just speculating on the news and getting a big pop to the upside, and what companies you might want to consider doing that on as a way to maybe protect yourself against the potential of not participating, the fear of missing out to the upside in some of these stocks that have been hurt since the pandemic announcement. So let's get into the actual strategy today. And once again, it's a paper trade. It's not meant to be a recommendation, but let's look at it. And the one thing that I highlighted, and I might be willing to go a little bit more at the money, but if I look at the actual option contracts, I'm going to start in November 18th, 18 days away. This is the Ally Invest option chains. We see Jets at 2042. It's up 15%, which is basically when Lindsey was talking about. That's where we're at. But if I just look at the at-the-money vol, I'm going to stick on the call side of the chain. 2050, that's trading at 53% in the nearer term. We go out a little bit further, it's trading at 50%. And we go further out, and we see that the option that I'm going to look at today, the March 19th expiration, 130 days out, is trading at 49%. So in general, that's still high volatility. It's way off compared to where it was in March. It's came down quite a bit, but it's still high. So because of that and everything else that I mentioned today, that the news has already kind of came out, we'll see what happens if it is the actual news, but it was pretty good news today. And if we look at that, then I want to go a little bit deeper in the money. I don't want to pay as much vol premium. The deeper I go in the money, the less time value I buy. And I want something that's going to act like the stock. So if I bought the stock outright, it's 2045. That means that I buy 100 shares. That'd be $2,045 that I would have at risk, obviously. In this instance, I'm going to buy something that acts like the stock. It's a longer term leap. And I'm going to click on this. It's trading right around 16. We got decent markets in this underlying. Now, on leap options, one of the downside is the options are never as liquid as the stock, and that kind of makes sense. The stock is only a penny wide in the spread. If it wasn't for that, I think almost everybody would buy leap options and rent the stock as opposed to own it if you just had a shorter term outlook on the underlying. I don't know why you would pay and have all the risk of owning the stock outright. So this is an alternative to it. We see the delta is 83. That means if this stock goes up 1, your option should go up approximately 83 cents. Or if you bought one option contract, about $83 that position should have on it. So overall, we're buying something that looks like the stock. I take a peek over and look at the put side of the chain of the Ally Invest option chains. I see that, let's call it 80 cents. That's the time premium that you're paying for buying the right to buy the stock as opposed to buying the stock outright. So I don't want to pay a lot of time premium. If we bought the at the money option contract, that time premium is about 10% of the underlying stock at $2 right there. So that's just a little bit too rich for my blood. So I'm going to go a little bit deeper in the money. I'm putting up more capital, not as much as buying the stock outright. I'm going to have a little less susceptibility to time premium erosion, and I'm going to get something that acts a lot like the stock. Totally different outlook, as if we would have been doing this trade last week on the Monday stock play of the day, if you will. We might have been looking at out of the money option contracts to speculate on this big move, hoping that it would have went through our strike price on the upside. And that's obviously the best that you could ever do on out of the money option contracts. So let's officially make this our paper trade by putting it in the right rail over here. And this is the way the order ticket would look. We'd be buying to open one of the March 19th expiration, 16 strike call. It is in 2021. The midpoint is 515. I don't know if we can get it filled at that level. So to make it official, let's say 1520, we'd work the order. But when you're buying single leg option contracts, you really need to focus on what the actual asking price or the natural is that's quoted here in the Ally Invest platform. We'll call it 520. Not a guarantee that you can get a fill at that level. If you place that order for one contract, you would be $520 worth of risk and plus commission. You have to add that to the bottom line. And that would be the official paper trade for this week's stock play of the day. All right. Now I'll put up the profit and loss graph here. It's very straightforward. One of the things about buying the option that's really nice relative on a speculative trade and a volatile underlying like this is that basically here's your hockey stick shape, if you will. from 16 on down, I can't lose any more than that $5.20 that we paid for it. On the upside, I still have substantial upside all the way up, just like if I own the stock outright. Doesn't quite move as fast as the stock, but it does move fairly fast because we went deeper in the money. And we went deeper in the money because we're worried about implied volatility concerns overall. All right. So I'm sure that generated a lot of questions. Lindsey, do we have any questions as I look into the chat box over here on my left?
Yeah, we've got some questions, but to remind our viewers, we are going to take your live questions right now. So feel free to write in the chat box over to the right. We love to hear from you. So we appreciate those of you that are already chiming in here. Drew says, hi, Drew. He's wondering how we feel about stay-at-home stocks like Netflix and FVRR. That's five here with Pfizer, I think. Netflix, I think the stay-at-home stocks are going to probably come under pressure here, Brian. I don't know what you think. But Netflix's last earnings report, they reported slower than anticipated subscriber growth as they pulled forward a lot of that growth in the initial months of the pandemic. So investors are keenly keeping their eye on that stat for sure, like they do every quarter. I think some of the stay-at-home stocks, though, you've got to review on a case-by-case basis. While they might take a breather here, and even some of them will see a bit of a pullback. We saw the FANG stocks this morning a little bit lower, but still hanging in there despite the positive news. I think that people are kind of reevaluating these stocks in particular and determining if too much of the outlook has been already pulled forward into the stock prices. Too much of their corporate earnings has been pulled into the stock prices because some of them do carry premium valuations. But at the same time, we have changed the way that we operate, and technology has become a much bigger and broader part of our lives. So I think that is something that investors need to think about and not just dump these stocks because of a one-day pullback or two-day pullback. It could be a potential buying opportunity for long-term holders. That's just the way I'm thinking about it, Brian. I don't know about you.
Well, I think I can just respond to that by saying, here. It's kind of more so in your wheelhouse, but overall, the question still is how much of this stay-at-home environment is going to stay after everything has played out and we're on the other side of this. How much of this environment that we're at right now, as we're taping Stock Play of the Day in my home overall. So I think I agree with the way that you approached it and your thoughts on it. You still, obviously, it's not going to be as beneficial to some of the stocks, but overall, the whole world has changed since this pandemic has hit.
Yes, that's true. We've got a question coming in, Brian, from JHL on any comment on gold. Do you have any thoughts?
I'm sorry, say that again, Lindsey. I didn't quite hear it.
Any comment on gold? Gold's down 4% this morning.
Yeah.
1864 is the price I'm seeing now. I think you're seeing a little bit of selling pressure in the yellow metal today as a risk on feel takes over the market. So I think investors are kind of selling some of the profits in the gold trade. But you do have to remember there's still a lot of stimulus, a lot of money, a lot of debt out there. So that could support gold. Brian, you and I had done a trade on gold once or twice earlier this year at the beginning of the pandemic.
Mm-hmm.
That has played out pretty well. It's something we'll keep an eye on, but just off the top of my head, today's action might be a little premature for gold given where we're at just in the stimulus in the expectation for stimulus to come be added in the next couple months as the consumers still kind of try to get their footing. And until we actually get distribution of the vaccine and things like that. Brian, anything to add?
Yeah, exactly. As far as gold is concerned, it's not surprising that it's down because in general, most people think of it as a recessionary type play. And the thing that could hurt us the most or could create a recession has a little bit of good news, right? With Pfizer coming out with a potential medicine or vaccine that could help us out there. So it makes sense that gold would come down a little bit, but it's still a long ways to go. And I think it really, everything that you said about the stay-at-home stocks, I think also applies to the economy going forward. The idea of getting everybody vaccinated is still a huge challenge if this vaccine does make it through all the approvals and they are able to rush it to market and everything like that. We still have months and months. You could even say almost a year before they anticipate that everybody would be vaccinated, if everybody is willing to be vaccinated overall. So there's still a lot of question marks. Gold is going to come off because of that. That's not unexpected after this news. But with that said, it's more so what's your outlook on the economy going forward and actually getting the vaccine out to the people, and how much damage can be done while we're waiting for all of this to happen. And are there going to be bring some more money to the marketplace? Are we going to be getting some stimulus? What does that do to the overall economy, raising that debt? So there's still a lot of questions out there. Overall, we see the market made a run up. It's came off a little bit today. Gold made a run down. I wouldn't be surprised if it made a little bit of a bounce back up too. And everything kind of comes in to land a little bit somewhere in the middle overall, and then we move on. But overall, great news today to hear this. This is great news for the world, not just the United States.
Yes, exactly. Brian, we're getting a lot of questions here. Guys, I see a lot of questions on specific securities and stocks. Brian and I aren't here to opine specifically on stocks and investments, but more here to educate and in general give our thoughts on what's going on in different sectors or industries or individual stocks as well. There's a question Drew asks about the REITs. And there was another question about the financial services sector, Brian. I don't know if we want to touch on those overall. We won't get into the sector or the stock specifics that you guys have asked for, but in general, the REITs, I would say, have had a much more difficult time, especially those exposed to office REIT space in this uncertain period of how work is going to look after we get past this pandemic. A lot of companies are talking about reducing their footprint and things like that. But then some of the REITs that could be exposed to the hotel and lodging industry, they could potentially do better on the back of this vaccine news. Of course, those REITs exposed to the data center and storage space have done well, as that has been a popular area for investment for many companies in the face of the pandemic. So there's a lot of different ways you can look at REITs. There's not a lot of public REITs out there. So I always caution when you're looking at the S&P 500, the sector overall, it's small and it's representative of only a minimal amount of the REIT space. So that's something that you have to keep in mind. With regards to the financials, I think the financials are a great reopening story, and they should do well on the back of that economic recovery. But they do need interest rates to improve to really begin to take off. Again, these are stocks, though, that have really been beaten down. They might not be the first ones to take off, like what we're seeing in the travel stocks, even the energy sector today, the cruise lines, things like that are probably going to pop first. But the financials is an interesting area, I think, as things do get better, Brian. I'll leave it there.
Yeah, I got one comment on that. Actually, Lindsey, if you want to know more about that, just go back a couple of stock plays of the day. We did talk about the financial and ETF, the XLF. Just overall, and Lindsey gave a great outlook on the XLF in that stock play of the day. And the other thing we also highlighted today on the chart, when we looked at our chart in the stock of the day, Jets, we mentioned that the stock it only came back about 40% from the big downturn as far as the retracement is concerned. The financials haven't came all the way back either. So that's another thing just from looking at the charts, looking at some of these sectors that have been beaten up because of the pandemic, but still have room to go to get back to where they were before the pandemic. That's obviously not the case in a lot of the tech stocks overall. They've already came back and blown through those highs from back before the March pandemic announcement. But there's still some industries that haven't quite got back to there yet. So those are the ones that are kind of interesting on a valuation basis overall. And the airlines and also the financials happen to be in that world as far as charting is concerned. All right, we got any time for any more? We're a little bit long here.
Yeah, we're a little long. Sorry, guys. I know there's a couple more questions lingering out there. Brian will be back on Stock Play, the overtime show on Friday at noon to review the trade that we went through today with Jets. Please be sure to tune in there. He's always given great ideas of ways you can think about adjusting the trade. I know there's a question about a trade in NEO within the Q&A, the comments here. Sorry we didn't get to that, but it gives you a way of turning into Stock Play of the Day overtime will help you think about how Brian thinks about adjusting some of these trades as time goes on. So be sure to tune into that this Friday.
All right. And to make sure that you do, you want to click subscribe and ring the bell to make sure you get all of the alerts. And we'll see you this Friday on the Stock Play of the Day overtime at noon Eastern. Thanks for coming, everyone.